Hello, I'm David Chaston with 99, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, including news the US economy slowed to a crawl in the March quarter. But first, this morning, the US Federal Reserve looked past those very weak first quarter economic growth numbers and confirmed another $10 billion cut in its bond buying program, now down to $45 billion a month, which has been taken as a sign of confidence in the American economy's prospects. The advance estimates of US economic growth, the earliest of three the US issues, reported a very weak March quarter of only 0.1% real. Given that most observers thought March was rebounding from the weather-related slowdown, January and February must have been quite negative. The US dollar fell on the news, as did bond yields. US Treasury benchmark 10-year bond yields fell more than 4 basis points in an hour at 2.66%. Oil also fell along with the gold price, and it is now below $1,290 an ounce. Equities rose. One win in all this was the Kiwi dollar. We start the day with the New Zealand dollar up at 86.1 US cents, also up against the Aussie at 92.8 Aussie cents, and the TWI is just a fraction under 80. In Europe overnight, the European Court of Justice said Britain could not block other EU members from establishing a Tobin Tax on share and bond purchases and on derivative trades. The London Financial Centre is seriously worried. And finally, China is poised to overtake the US as the world's largest economy, while India has vaulted into third place ahead of Japan. These are using PPP calculations. All this is according to a World Bank UN program. Under these latest calculations, which were for 2011, the New Zealand dollar was worth 67.3 US cents. That is 15% below the 79.2 average that was used in the FX markets. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.